Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at using multi-time frame analysis to help you with the higher time frame chart when you're trading using MTPredictor. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown you for illustration and training purposes only. Remind you there's a risk of loss in trading. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. So let's have a look at the ES from yesterday. Just want to take that off. Right, this is a 3-minute chart of the ES from yesterday using the day session only chart, where we look at data just between 9:30 and 4:15 New York time, in other words the regular trading hours for the US E-minis. So how do we approach this? Well, we have an MTP trend color, but we don't use that first and foremost. We look to the higher time frame chart. The higher time frame chart is a chart between 3 and 5 time frames higher. So on this it would be the 15-minute. So we go out to the 15-minute, and what I want to do is use our training mode and just go back to a bit earlier in the day like that and show you how we use our higher time frame chart. Now what we're trying to do is we're trying to project in advance areas where we anticipate, we're not forecasting because markets are random half the time, we anticipate where we should be looking for potential support and resistance. This is the last swing into the low, so right mouse click over this pivot high, do DP, and can you see how it's on the chart in advance? Do you see that? It's there before the market even gets there. So what we're doing is we're putting that out there in advance. We're saying if the market gets there, not that it will, but if it gets there, it's an area of interest, and we then want to be wary for a potential high unfolding on the shorter time frame in that higher time frame resistance. If I turn trading mode off, you can see that's exactly what the ES did yesterday. It went up and made the high of the day at that projected level. Isn't it nice that you actually had that level on the chart in advance? So let's now go down to the 3-minute chart. This is where you're actually looking for the trades. So you can see there were no trades earlier in the day. So what are we looking for? We're looking for a potential trade setup in higher time frame resistance. In other words, where the market is anticipating that the market is going to make a reversal on the higher time frame. So again, if I use trading mode, again, if we go back to here, can we see we had a potential sell setup here? Our MTP trend had gone grey to show that we're in the process of making a reversal, but the important thing was to see how this shorter time frame sell was at higher time frame resistance. So if we right mouse click, do analysis, this gives you the potential trade. If we go forward, you can see we're actually taking into a short trade. We use position sizing to keep our initial risk small and under control. So if this is stopped out, we lose 1% of our trading account. Sorry, 2% in our trading account, because that's what we're risking. You see, we're risking 2% of a sample $20,000 account. You could do smaller accounts if you want, and that will then adjust the position sizing accordingly. But the point being is that if this trade is wrong, you lose 1 R or 1 risk unit. If it's right, it would go down here and you'd make a potential 12 R or 12 risk units. This is what MTPredictor is all about. It's not about projecting the future or anticipating where the market's going. It's saying that if you're right, you have a big trade, not in dollars but in risk units. If you're wrong, you have a small loss and your loss is kept small under control. So if we go forward, you see the market reversed straight away, went sideways for a bit and then stopped you out. Do you see that? There's our history triangle coming on there to show that it was a losing trade. So this would have been a 1R loss. Now it's important to understand that losses can and will and do unfold. In every trading approach, on every trader will always have losing trades. It's important to understand that. But that loss was kept small at 1 risk unit. We move forward and there's another sell setup. So we again do our analysis on that trade. This time it was a potential 16R profit. So exactly the same as before, that if we were taking into this trade, which we were there, we just clipped in, this would have been a -1R loss if you're stopped out. If it goes to the target, the profit would be 16 times that loss. If we move forward, you can see there was actually another setup here, but it was actually a double top. So if I go over here and I look at the high of this bar here, can you see the high was at 60.75. Our stop was at 61. So actually this wasn't stopped out. So this short trade wasn't stopped out because it was a double top. If I now turn trading mode off, can you see how that now turned out to be the high of the day? The market declined sharply and actually went down to this target here where this profit was available of approximately 16R. That means you turned initial risk of $275 US into just under $4,500 US. So it's a very, very good trade indeed. If you had been stopped out there, let's say you had been, and then you had to come in again on this next setup. If I do the analysis on this next one here, this was actually a slightly better trade because it got you in a slightly better level, and the profit would have been 18 times the initial risk. So that would have been a really good trade. But in reality, you wouldn't have been. You'd have been still in from that one there. Perhaps you didn't get taken in. Perhaps you just missed that and you weren't clipped in, and you had to come in on the second one. But either way, there was your sell setup that basically caught pretty much the high of the day yesterday, and then had you in during the sharp decline during the afternoon to capture an absolutely brilliant trade. But the whole point of this is, do you see how we had this higher time frame resistance on our chart in advance? So that's the whole idea of MTPredictor, is we're projecting in advance potential areas of support and resistance. The market doesn't always go there. If it goes there, it doesn't always reverse there, because markets are random 50% or slightly more of the time. But the point is that we have that on the chart of an area of where we want to be anticipating or ready for, or be ready for the market making reversal. In other words, an area to be aware and to get ready. So that was on the chart in advance. So we had that there well before the market got there. The market went up. The first trade we had was a losing trade, -1R loss. We then came in to do a second trade that caught the high of the day pretty much, to then give us a lovely short as the market declined sharply for a large profit. So that's the whole idea of what MTPredictor is about, projecting in advance areas of potential support and resistance. We're not looking to just use this as a mechanical trading system. Why? Because markets are random half the time. We don't just use our MTP trend color, we use that as confirmation. Our first thing we do is we place our higher time frame DPs on the chart. If the market is then making a reversal at those levels, we then use to gauge the larger degree trend. We then look to take the shorter term signals in the direction of the larger degree trend. If there'd been a sell setup a bit later on in the day here, perhaps it had gone down, then made an ABC correction here, the larger degree trend would have been down, and again you'd been looking for sell setups because it was coming off higher time frame resistance earlier in the day. So hopefully this is a good example of showing MTPredictor in action on the ES yesterday, and as you can see we had a lovely result, catching the high of the day and controlling the first initial loss. Losses can and will and always do unfold, but then riding the next profit to unfold where the profit was much larger than the previous loss. Again, we look at profits not in dollars but in risk units. In other words, how much is this trade bigger than your losing trade? So this would be 16R, or 16 times the initial risk.